Hey guys, Aaron here with Carnivore Trades. Today is September 5th, 2023. Doing a special video here today. Been getting a lot of requests here. So you guys clearly like the uranium market. So I figured I'd do a little special video on that. Getting a lot of requests too to put the URNM and CCJ in the daily videos. I'm not going to do that just because it doesn't really pertain to the overall market, which is kind of where what those videos are about. And I do cover them every weekend, so you guys know, on Wall Street for Main Street on that channel for the weekend video. But right now, we'll see. In any case, CCJ here. I did a video a couple years ago, and I'm going to link that in the end credits there. It was in September of 2021, and actually made a call sooner than that. But basically, I said the uranium bear market's over with. And since then, we're just using CCJ here as a proxy. It was in the $17, $18 range, and it's at 38 now. And I talked about this a lot lately. But, you can see it had this kind of wedge pattern. And I have explained this many times, why is this wedge here? Why is it doing that? Well, if you look at what you're going into, well, we got above these areas essentially, and then we kind of tightened this range. But you're going into this big sell bar from 2011. What is that sell bar? If we go to a daily look and go down here, pull it all the way back, you can see that's actually the Fukushima gap down. So there's a lot of supply in there. But in any case, what we're looking at here with CCJ, you had to consolidate that, right? So it said, look, uranium's doing backing and filling. This is where you want to start to accumulate, CCJ and some of these other miners. And we had that breakout a few months ago, really, and we've gone off to the races. If we look at the URNM, I was very explicit talking about this. This weekly pattern here. I said as soon as we get above this red bar, you have a down move, you got a bear pattern here, right? You got a bearish inside bar here on the weekly. But if you can close above this red bar on a weekly close, you negate that, and then you can go higher. We did that. We had a little pullback, and it has gone from 31 and change to almost 40 here. So big move there. If we look at the URA, you can see the kind of the same thing. I know some of you guys hate the URA, but I like using it for a proxy. But you can see the same thing. Red bar there, we closed above it, and $20 to 24. So pretty big move there. Now, right now, what would I do? So I do think the bear market's over. That doesn't mean it's going to go up in a straight line forever. In fact, on CCJ here, again, in the last 3 months, what's it, June, July, August here, we're in September now. You've gone from 28 to 30 here to 37, 38. Would I be a buyer here? I would not. And that doesn't change my long-term view here, but from a dollar cost average standpoint, it doesn't really make sense to me, right? So you're going into, again, if we flip back, you're going into a level, right, where there's bag holders here, right? This is where they're sitting, right? And they're still sitting there, trust me. Some of these funds, they buy and they just hold. And they'll still be underwater. Now, if you bought here, if you bought up here, or even back here, and you're now getting a chance, look at where CCJ is trading, you're getting a chance to get out at a break even, you're probably going to do that. And take a look at the volume there on that sell-off. Total panic. This is Fukushima, right? So we're finally filling the gap, which is great. It's bullish. It's it's needed. It's been a long time coming, right? I fully believe in the uranium market. The future. These ESG guys, this energy's got to come from somewhere, and if the energy's got to come, they think that they're just going to put a bunch of windmills up, and that's going to require oil and gas, and obviously uranium also is positioned to benefit from that too. But in any case, we're back to these levels here, and this was in a raging bull too. Again, look at that move there, got close to the highs, but. Anyways, would I buy it now? No, I would wait for consolidation here. So that's why I'm doing the video, because I get a lot of requests on it. But I would wait for consolidation, get a pullback, and you should get one. I would say, 32 is going to be good support there. Your pivot high, your breakout level. That should be a good area there on the weekly. If you're using a monthly pattern, again, if you're a long-term investor, maybe it could get down to 30 even, or at least wait for this to give you some type of pattern like this big wedge. So that's what I would do with it here. If we look at the URNM, same kind of deal, right? So, weekly, you're into this, you got just above this pivot, but then you got this red bar right here. So 41 and change, reversal bar, retested it. That's where there's going to be sellers sitting. So that, I would not be, I don't think dollar cost average here makes a lot of sense from a risk reward standpoint. So at this point in time, I would wait for a pullback. You get back to this trend line, you get back into this area where we broke out, we never back tested, you get back to 36 even. That's where I think you got to have a better risk reward here on these charts. But right now, they've had a great run. Even kind of some of the smaller names, Denison has had a nice move. It's had a nice that's Denbury. DNN, where's Denison? DNN, there we go. DNN here had a nice move off the lows here, but again, you're kind of coming into that $1.50 handle. This is where we reverse. So again, look for these things to pull back here, consolidate maybe for, I don't know, a couple weeks, couple months. It could be, it depends. But at least at this point, risk reward here, I can't, you're up in a straight line going into a massive wall, into a massive, long-term resistance level, like a historic, Fukushima was a big deal. It killed the market. This was the bear market there. This started the bear market, right? And now it's over. So you're going back kind of full circle. So I wouldn't advise picking anything up here until you get some consolidation weekly or monthly. But either way, market is holding up well, and it's had a nice run. And it should continue to do so, I think, over the next 5 to 10 years. So I like the uranium market here, but long story short, right now, I wouldn't chase it at these levels. I think you can get a better dollar cost average if you're just a little bit more patient there. But anyways, guys, going to wrap up here. You guys take care. Come find me on carnivoretrades.com. I will talk to you guys all later today.